How blockchain is disrupting traditional wealth management. The emergence of blockchain technology has been nothing short of revolutionary, and its influence is spreading across multiple sectors, with wealth management being one of the most affected. Traditionally, wealth management has been a relatively conservative industry, relying on trusted intermediaries such as banks, asset managers, and financial advisors to handle the financial assets of clients. However, blockchain, a decentralized digital ledger technology that records transactions in a secure, transparent, and immutable manner, is reshaping this landscape. Its application in wealth management is breaking down traditional barriers, enabling greater efficiency, reducing costs, and providing more personalized, secure, and transparent services to clients. At its core, blockchain is a decentralized and distributed ledger that securely records transactions across multiple computers, ensuring that data is immutable and transparent. The technology offers a level of security and transparency that was previously unattainable in traditional financial systems, where intermediaries like banks and brokers played a crucial role in facilitating transactions. Blockchain allows for peer-to-peer transactions without the need for trusted intermediaries, making it a natural fit for wealth management, where security, trust, and transparency are paramount. The first and most significant way blockchain is disrupting wealth management is by reducing reliance on intermediaries. Traditional wealth management services often require the involvement of banks, custodians, brokers, and other financial institutions to facilitate transactions and manage assets. Each of these intermediaries adds costs, time delays, and potential risks, especially in cross-border transactions. Blockchain technology eliminates these intermediaries, allowing wealth managers to directly transact with clients and other parties in a more efficient and cost-effective manner. This disintermediation of traditional financial institutions can lead to lower fees, faster transactions, and reduced complexity, all of which benefit the end client. In the context of asset management, blockchain has the potential to democratize access to investment opportunities that were previously available only to high-net-worth individuals or institutional investors. Through blockchain, assets such as real estate, fine art, and private equity can be tokenized, represented as digital tokens on the blockchain. Tokenization enables fractional ownership, allowing individuals to invest in assets with smaller capital amounts, thus broadening access to diverse investment opportunities. This democratization of investment is a major step toward leveling the playing field and providing more inclusive financial services to a wider range of people, regardless of their wealth or geographical location. Moreover, blockchain's transparency is transforming how wealth managers provide services to their clients. In traditional wealth management, clients often rely on their advisors to provide accurate information and reports about their investments. These reports, however, can be opaque and prone to errors or biases. Blockchain, on the other hand, provides a transparent, immutable record of all transactions, enabling clients to track their investments in real time. This transparency builds trust between clients and wealth managers, as clients can independently verify the status of their investments without relying solely on the information provided by intermediaries. Blockchain's immutability is another factor that is changing the wealth management landscape. The decentralized nature of blockchain ensures that once a transaction is recorded, it cannot be altered or deleted. This feature is crucial in ensuring the integrity of financial records. In the wealth management sector, where accurate record-keeping is essential for regulatory compliance and client trust, blockchain offers a level of security that traditional systems struggle to match. With blockchain, wealth managers can ensure that client records are tamper-proof, and any changes to a portfolio or financial transaction are permanently recorded, reducing the risk of fraud or manipulation. In addition to improving transparency and security, blockchain also offers significant benefits in terms of efficiency. The process of transferring assets or executing trades in traditional wealth management can involve several layers of intermediaries, each requiring time and resources to process transactions. Blockchain streamlines this process by enabling peer-to-peer transactions that occur almost instantly and at a fraction of the cost. The use of smart contracts, self-executing contracts with the terms of the agreement directly written into code, further enhances efficiency by automating many of the tasks traditionally handled by financial institutions, such as verifying transaction terms, executing trades, and distributing dividends. For instance, in a typical scenario, A client may need to place an order to buy or sell an asset through a broker, who then communicates with a custodian or clearinghouse to settle the trade. This process can take days, especially when international transactions or different time zones are involved. By using blockchain, these transactions can occur almost instantaneously, without the need for intermediaries to validate each step. Additionally, smart contracts can be programmed to execute the trade when predefined conditions are met, removing the need for manual intervention and reducing the likelihood of human error. Regulatory compliance is another critical area where blockchain technology is making a significant impact. Wealth management firms are subject to a wide range of regulations, such as anti-money laundering, AML, and Know Your Customer, KYC, requirements, which are designed to prevent fraud and ensure the integrity of financial transactions. Compliance with these regulations often requires extensive documentation and verification processes, which can be time-consuming and costly. Blockchain can streamline compliance by providing an immutable and transparent record of all transactions, making it easier for wealth managers to demonstrate that they are adhering to regulatory requirements. Furthermore, blockchain can help automate KYC and AML processes through the use of digital identities and smart contracts, further reducing administrative burdens. Blockchain also introduces new opportunities for private wealth management by offering innovative products and services that can be tailored to individual client needs. For example, through decentralized finance (DeFi) platforms, clients can gain access to lending, borrowing, and yield-generating opportunities without relying on traditional financial institutions. DeFi platforms use blockchain to offer financial services such as lending, borrowing, trading, and insurance directly to users, bypassing intermediaries like banks. Wealth managers can leverage these platforms to create customized financial solutions for their clients, whether it's through decentralized lending or earning yield on crypto assets, all while maintaining greater control and privacy over their assets. The rise of cryptocurrencies and digital assets has also significantly impacted the wealth management industry. Many traditional wealth managers have been slow to adopt cryptocurrencies due to concerns about volatility, regulation, and security. However, blockchain's role in facilitating the creation and management of digital assets has led to the development of new investment strategies that incorporate cryptocurrencies, such as Bitcoin, Ethereum, and other altcoins. These digital assets offer a new avenue for portfolio diversification and the potential for high returns. Wealth managers who embrace blockchain technology and cryptocurrencies can help their clients access these emerging asset classes, which could potentially offer substantial growth opportunities in the long term. Blockchain's integration with other technologies, such as artificial intelligence, AI, and machine learning, further enhances its potential to disrupt wealth management. AI can be used to analyze vast amounts of data on the blockchain, identifying patterns, trends, and investment opportunities that would be difficult for human advisors to detect. Machine learning algorithms can help wealth managers create personalized investment strategies by analyzing client preferences, risk tolerance, and financial goals, all while leveraging the data stored on the blockchain to provide real-time insights. Blockchain technology is fundamentally altering the wealth management industry by providing greater efficiency, transparency, security, and inclusivity. Its decentralized nature and ability to eliminate intermediaries are making traditional wealth management services more accessible and cost-effective, while also introducing new investment opportunities and innovative financial products. Blockchain's ability to create immutable, transparent records is also enhancing trust between wealth managers and clients, ensuring that investment transactions are secure and verifiable. As blockchain continues to evolve and integrate with other emerging technologies, its impact on wealth management is likely to become even more pronounced, further disrupting traditional financial systems and shaping the future of wealth management in a more inclusive and decentralized manner.